Corporate America also getting ready to report quarterly results over the weeks ahead. And as always, Bob Pisani says those earnings will be a key driver of stock prices.
Second quarter earnings season starts in less than 2 weeks, and the early signs are we might be in for a positive surprise. It's early, I know, only 23 companies, about 5% of the S&P have reported earnings for the second quarter, but the results from the early reporters like Nike, Oracle, and Darden have been surprisingly strong. Earnings for those 23 companies are up 12% from the second quarter last year, continuing a rebound that began a year ago. But the big story is revenues. They're up about 8%. That's important because skeptics have argued for years that earnings growth is coming mostly from cost cutting and stock buybacks rather than from real revenue growth. That's not the case anymore. It takes away a major argument for the bears. But 5% is a very small sample. What about the other 95% they haven't reported yet? Analysts are traditionally optimistic, you know that, and estimates usually come down as we get close to the quarter. But this time, estimates for the other companies are not being reduced nearly as much as in the prior quarter. And more than 40% are seeing estimates increase for the third quarter, not decrease. That's unusual. This implies that companies are very comfortable with their earnings estimates right now. Otherwise, they'd be cutting the numbers much more aggressively. Now, earnings season doesn't really start until July 14th when JP Morgan and Wells Fargo report. But even though it's a small sample, we're off to a strong start. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.